March cotton stands at 66.49. All right, let's bring in our guest analyst who's batting cleanup for us here today, Mr. Oliver Slope. He's with Blue Line Futures in Chicago. Oliver, the floor is yours. What say you?
Well, a little bit of a pullback in the grain markets today after what's been a really nice run to the upside on the back of really funds just piling in, and specifically in that corn market. So I don't think the weakness in today's market is really anything to be overly concerned about. I think the path of least resistance is still up and to the right, particularly in some of those new crop contracts, looking at new crop December corn and new crop November soybeans over the last couple of days. That's really caught our attention as they've been the outperformers, and their chart technicals look pretty darn constructive as we start to get into that time of year where, acres is going to be a bigger and bigger conversation. So you might have some positioning out there. I think also some of today's weakness, maybe end of the month profit taking on some of these positions that the funds have been long. And counter to that, funds have been net short wheat for quite some time, the only grain that they're still short. So you're probably seeing a little bit of short covering on that. And all in all, wheat has been mostly range bound for the better part of the last month, but we're starting to see that upper end of those bounds get tested. So if we can see a strong conviction close out above 570 in that March contract, I really wouldn't be surprised to see that kind of propel prices higher towards that psychologically $6 level as funds maybe look to cover. And that wheat's been just a laggard and underperformer relative to the corn as well. And when you look at that as a spread, I think wheat could play some catch up here as we look to turn the calendar into a new month.
We've got, obviously, end of month tomorrow. You just mentioned that. But how about, it feels like the funds are in the driver's seat in corn to me. I feel like the farmer has sold what they're going to sell. I mean, they might have more to go, but $4.50 came and went, $5 came and went. If we do get something bullish, who's going to get in the way of the funds going higher?
Well, that's exactly it. And I've heard a lot of people talking about, well, the funds are so aggressively long. What happens, when they decide to jump ship? And I don't know that that's going to be the case just yet. Funds are long 321,000 contracts, as is the last commitment to traders report back in 2021, April. We saw them as long as nearly 400,000 contracts. So looking at that alone, they've got room to add. And if you look in some of the other agricultural sectors, like the livestock markets, you see that funds have really pressed those records. They exceeded the lean hog record net long by about 30% this year. The feeder cattle net long, they exceeded that and set a record by about 50% this year. So if you're just selling corn and shorting corn on the basis of funds being overly aggressive to the long side, I don't know that that's going to be a great strategy here this year. It
might be burn some fingers. It might be a little lonely. All right, the great stuff as usual. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with Oliver Slope. He's with Blue Line Futures up in Chicago. We'll be right back. Mr. Oliver Slope, Blue Line Futures in Chicago. Oliver, thanks for being on. Okay. I don't know. What sticks out of you the most there, if anything?
Well, I think you could probably tie it together with the grain markets and the theme there of maybe some end-of-the-month positioning. We know that the funds have been really pushing that market to the upside. Live cattle, feeder cattle, and lean hogs all basically record net long across the board. And so you're seeing some of that unwound today. The fundamentals have been strong and remain strong. But when you get everyone on the same side of the boat to this extent, it leaves a lot of room and risk to the downside, which is really what we've seen over the last 2 days. And I wouldn't be surprised to see it maybe overcorrect to the downside before we eventually find some sort of equilibrium price, assuming that cash market remains relatively strong here going forward. But again, I think the fund positioning is a big caution flag because the cattle markets are a lot different than corn, right? When you get everybody on the same side of the boat, there's not a whole lot of people on the other side when those funds look to exit.
It's not even like, everybody says the elevator up, the elevator shaft, or no, escalator up, elevator shaft down. It's not even like an elevator shaft over there. It's like trap door down, It's like all of a sudden you're gone.
Yeah, so I would tread lightly, and those are some pretty hefty limits in the cattle markets as well.
All righty, we're going to get going here. Thank you very much, Oliver, for your content. Always great to see you. Oliver Slope, Blue Line Futures in Chicago. We're going to bring it back here to Nashville, but they